Hey, this is Matt from InvestiQuant. Today is Wednesday, November 4th, 2020, and the markets are screaming to the upside today following the election from yesterday. Results still uncertain, but the markets are risk-on mode today. We had sizable up gaps this morning in 3 of the 4 instruments that then moved higher after a quick test lower, and we have lots of range, and it has been pretty directional to the upside. The S&P is working with about 84 points of range as of the time of this recording. So we've already got a larger range here early into the afternoon than the 5-day ATR, and this is coming off of a large up gap. So giant moves higher. That's why you're seeing S&P here up over 100 points on the session, and holding up near the upper portion of the range as we approach the afternoon. Now, before I hop into my study, I'm just going to say here, I've looked through a bunch of different patterns trying to find some similar scenarios to what we're seeing today, yesterday. It's just really rare territory. It's hard to find something that really mimics the price action that we've been seeing. So I'm going to be a little bit more generic in this study than what I would like to do. I'd like to add a little bit of context around the price action from the prior day where we had a sizable up gap. The prior day that finished higher, and it's followed by another sizable up gap that is trending higher. But these days just don't happen. There's very, very few samples of this type of price action. So we're not going to be looking at something super specific, but we are going to be looking at a sizable up gap that continues to get sizable range and holding near the highs. So let me set that up. I'll show you what we're going to do here and discover with all 4 instruments. And we're going to use an intraday time-based entry of 2 o'clock. 2 o'clock I thought was important because still gives a couple hours before the day is over, and we've already achieved such a large range in this intraday session. So I've got a 2 p.m. entry that is long. The exit's going to be the end of the session, which is 4:15 p.m. Eastern time. Now for the opening filter, we're going to use a percentage of the 5-day ATR, and I'm simply going to say that the gap needs to be at least 50% of the 5-day ATR, and that kind of works into this idea of large ranges happening. So I'm going to put in a minimum gap size of 50% here, and I'm going to say that it is an up gap. So this is a pretty sizable up gap. And then next, I'm going to go into the post-open filters, and here I'm going to say that the intraday range is at least 100% of the 5-day ATR. So we have already gapped up at least 50%, and we've got 100% of the 5-day ATR as a daily range as well. And then lastly, I'm just going to put we're trading in the top half of the intraday range. So that kind of describes the action generically, in that we have lots of range happening and holding up in the upper portion of the range. Lastly, I'm just going to put it above a 200-day simple moving average. I'm not going to add a 10 just because I'm trying to get as many samples as possible, and adding that 10 is going to cut the sample size in half. So let me hit a few results here and we'll take a look. And here we go. So these are the results of going long at 2 p.m. Eastern time, exiting at the close of 4:15 p.m. Eastern time, when you gap up at least 50% of the 5-day ATR. And just for reference, the S&P 5-day ATR again is about 81 points. And then after the open at 2 p.m., you have already achieved 100% of the 5-day ATR, and you are trading in the top portion of the intraday range. This is happening above a 200-day simple moving average. So historically, we've got 28 samples in the S&P, 37 in the NASDAQ, 32 in the Dow, 24 in the Russell. And win rates on these are kind of mixed. We've got the S&P and the Russell both being favored. S&P coming in the strongest at 61%, and the Russell second strongest at 58%. Whereas the NASDAQ is just slightly weak, 46%, and the Dow, the weakest of the group, at about 44%. So a little bit mixed here on win rates, with the S&P being the strongest at 61, the Dow being the weakest at 44. If we take a look at the average win, average loss, you can see the average win in the S&P has been larger than the average loss. So not only is the win rate skewed just a touch to the upside, the average win has been a little bit larger than the average loss as well. That's also true for the NASDAQ. NASDAQ has a weaker win rate, but the average win is about twice the size as the average loss. That's not the case for the YM. YM is the weakest here, where the average loss is twice the size of the average win, and that's taking place on a slightly weak win rate. And then the Russell is pretty neutral on the average win, average loss, pretty similar in size, win rate just slightly favoring the Russell. So we do have a little bit of mixed results here, with the S&P being the strongest of the group for this pattern into the close. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.